Adab, Salam, Vadakam and Sasriyakal. Hi guys, my name is Jayant Mundhra and welcome to my channel. In today's video, we are going to dive into the data of a company called Aptus Housing Finance, which is one of India's largest housing finance companies. Plus, this one is special. Why? Because this is categorically focused on the South Indian market. It wants to grow there, it wants to build there, and that is what its growth is all about. And it has grown so beautifully that its data basically kind of enticed me that, okay, come and look at me. So let me take you on that journey. Let us begin right away. So look at this particular slider out here that I've got for you. So this one basically tells you the assets under management against the states. Okay. So basically the number overall has gone from something close to 2.5k crores to almost 6.7k crores out here, right? Within a span of just 5 years. So number one, fantabulous growth out here. That is the first takeaway. The second thing is, while all the regions have seen fantabulous growth, right? Just look at this one. Andhra Pradesh has basically gone from 472 crores of AUM to 2,358 crores of assets under management. So very, very concentrated and fantabulous effort has gone in here. That is very clear. Even if you look at the number of branches. So I don't have the branches division data for FY19 and 20, but look at what has happened here. The company has been consistently adding branches and in Andhra Pradesh, and now Andhra Pradesh and Tamil Nadu both have same number of branches, right? So that kind of tells you the kind of investment that company is putting in there, and the result is the assets under management growth that we can see out here. Similarly, when you look at the other Telugu speaking market, that is Telangana, this was basically 202 crores of AUM, which has gone to 943 crores. So again, fantabulous growth. So we can kind of say that, the company is really diversifying from the Tamil Nadu, particularly Tamil speaking states to the regions to the Telugu speaking regions. So that is there. And then we have got Karnataka, where the company was basically at 247 crores, has gotten to 539 crores. So not that big a growth, but still commendable. That is there. And that is, same things are also basically something that we can observe in the branches data as well. But look at this one. This chart tells you average assets under management per branch. Yeah, state-wise. So look at this. When we talk of particularly, Tamil Nadu, it really stands out. It had like 27.83 crores of assets under management per branch. It has gone to 33.69. But of course, its branches are also the oldest ones, right? In general, because that is where the company's core center has been. But when we talk of this one, look at this particular line, which is about Andhra Pradesh. So average assets under management was 16.75 crores. It has gone to 27.42 crores. Outstanding growth. Something similar has happened in Telangana as well, right? Fantabulous growth numbers. Karnataka, it never really grew that well. So probably that is the reason why company did not decide to invest further and expand at the same amount of pace. And that is why we see that Karnataka had 19 branches. It still has just about 21 branches. And other states, we have the numbers with us, right? So that is what has happened out here. But when we talk about branch level data, just look at it. So company had just about 20 branches in FY12. In the next 5 years, it got to 80 branches. That was fourfold growth in number of branches. And by the time it is basically FY23, we have gotten to almost 230 branches out here. So very, very steady and rapid scale up has happened, and consistently, right? That is what we can see. And for the last 3 years, I've broken down the numbers into how old the branches are, right? So number of branches which are 3 years or older have gone from 118 to 170, right? And if you look at number of branches which are 1 to 3 years old, that has gone from 58 to 34. So clearly more and more branches of this bracket have matured to 3-year older bracket. Look at this one. Number of branches which were less than 1 year old. So this is basically new branches added. 14 branches were added in FY21, 23 in FY22, 27 in FY23. The company is consistently increasing the number of new branches out here, right? That is happening. It also tells you that the company is consistently closing certain branches, but overall the additions are really happening at an increasing level. So that is a big positive. Number one. The other thing to look at is, so how do the age of branch differentiate the average assets under management per branch? So look at this one. The new branches, they have basically an average assets under management of 1.6 crores in FY21. New branches of FY22 basically had 3.8 crores of assets under management. In FY23, it was 1.64 crores. So these are very, small numbers. But when you look at branches which have gotten from 1 year to 3 years bracket, it suddenly jumps. Why? Because the branch has gotten older. More number of people begin to flock in to check out their loan products, and more customers are cracked that way. And hence the average assets under management also grow very, very rapidly thereafter. So it has gone from 11 crores to 17.52 crores. Stellar growth, right? Look at this one then. Branches that are 3 years plus older. They had an average assets under management of 31 crores, has gone to 32.6 crores, then to 36 crores. So this kind of tells you that, okay, you need to keep on adding new and new branches in different locations where you see potential. And as the branches go older, they will continue to build new business for you. And that is what they are doing. They're consistently adding more number of branches. That is one. And second thing is, we now know that they are expanding very heavily in the Telugu speaking market from the Tamil market, which is also positive for another reason. Why? Earlier they had a massive regional concentration. I would go to the previous slide and you would see that almost 60% or even more of their assets under management was focused on Tamil Nadu alone. That is very risky, because if anything political happens, any environmental calamity happens, say incessant rains, for example, Tamil Nadu basically has a lot of floodplains, right? So floods can happen. So those things can be very detrimental to these particular guys. But once you have a diversified portfolio, the risk for the overall company, the overall business is just that much lower, right? So that is the observation so far. But when all of this lending is happening across all these branches, what does it all aggregate to? So let us come to this particular part, the assets under management. Look at this. Such a beautiful picture. So if you look at it, the total assets under management were next to nothing, right? And they've grown so beautifully and consistently over time, right? So you might get confused by the green and gray parts. Let me clarify that. So green is basically the fresh disbursements that have happened in the ongoing year. That the year that we are talking about. So basically FY23 has seen 2,394 crores of fresh disbursements. That is there. And 4,344 crores is basically older loans. That is, this particular segment has given out this much of loans, right? So that is how we get to the overall assets in the management part. Fantastic growth out here. And if you look at it, each year, almost you can say, except for a few years out here, you can say that, okay, almost 65% to 70% of the loans, assets under management is basically from old loans, which kind of tells you that probably every 3 years, the overall AUM is renewed. Older loans have a life of that much and they keep on getting renewed every 3 years. That is one big takeaway out here. And who are these loans being given to? So basically, if you look at it, that 42% of the loans or assets in the management were given to people. It was with people who were new to credit, who had taken a loan for the very first time, who had no credit history before that. It has been falling consistently, which kind of tells you that as the company is scaling up, as it is lending out more and more money, it is growing a bit conservative. It is trying to be safe and it is reducing its risk exposure. It is trying to lend to safer set of people. That is one big takeaway. The other is, look at this one, blue one. So earlier 65% of the loans were being given out in the rural area. That increased to 68% and 74%. Now 74% from 65%, that is assets under management. So when we talk about disbursements, much of that is happening to this particular cohort. So you can probably say that almost 85-90% of the new loans being given are basically to borrowers in the rural areas now compared to before, right? That is another point. When you talk about this one, so 72%, 71%, that is the amount of assets under management with the self-employed people. So the company is clearly building a niche around lending to self-employed people. That is one core territory where it has built an expertise, it has a lot of experience, and it has a proven track record that, okay, we know how to assess which self-employed person is good enough to lend to. That is the another point. And then you have this particular line, which basically tells you how much of loans are going to lower or middle income group, right? LIG and MIG. So generally lower income group is basically a territory where the household has monthly income of 50,000 or less. Middle income group is considered something like 75,000 to 1 lakh bracket, right? We are talking about those particular brackets. So this has increased significantly. So it is very clear that the company is lending more and more to self-employed people in the rural areas who have certain kind of a credit history. They prefer them, and these should be people who belong to low or middle income group. These are the kind of people that basically come and take a loan from Aptus. It is kind of similar to the other companies that we analyzed a few days back, like Home First or basically Avas financiers, right? So that is what is happening in the business. But what kind of loans are these? Are these only home loans, or are these something else as well? Let us try to understand that. So this is basically previous chart only. I've taken the data for last 3 years, and here we have broken them down into different kind of loan products, right? It could be home loans, and the company also gives small business loans to basically, set up your shop or different other such things, right? There is also loan against property, that is mortgage loans. There is also top-up loans, that okay, you have taken a loan for building a home and you need some more money, then okay, we'll provide you that. Then there is also insurance loans, that okay, if you are trying to insure a particular property and for that you need some money, we'll give you that. So just look at that. These two are very small segments and they are not really growing. They are not really growth focus out here. The numbers give that away, right? Look at this one. Loan against property over the last, you can say, 3 years has gone from 651 crores to 1011 crores. This is basically a very secured form of lending, and this basically ensures that your losses are minimal in case the borrower defaults. So that is why these companies are trying to build a lot of focus in this particular area, because they anyway have experience in giving home loans. So why not take someone's home as a collateral and give someone money? So that is what is happening out here. So that is also growing decently. Look at this one, small business loans, again growing decently, almost 50% in 3 years. And then there is the core business area, that is home loans. Look at the number. It has gone from 2,197 crores to 3,908 crores in a matter of just 3 years. What that means is this number has grown by almost 80, 85, 90%. That is fantabulous growth, right? It is beautiful how basically this particular chunk has grown, and that is where major form of focus of the company is. Having seen where the much of the lending is happening, where new disbursements are primarily going, now let us move on to understand that how are the loans being given, at what cost, how much is the earnings out of it, and of course how much NPAs are happening, right? So basically when we talk about loan metrics, it can be divided into two particular sections. This one is basically about giving the loan, and this one is about collecting back the loan, right? So when we talk about giving the loan, basically first thing that comes is you have to find the money. So that is basically about a housing finance company has to borrow money from somewhere or has to bring in its own money. So when we talk about borrowing money, it borrows from an NHB or basically different banks or NBFCs, right? So its average cost of borrowing was around 9.5%. It rose to 9.8%, 9.8%. It falls to 8.43%, 7.74%, 8.1%. Now, this was in line with the global interest rate regime. It was coming down significantly. So it makes sense why it basically came down. But look out here. This remains pretty low at a time when the interest rates in the market have gone up significantly. Why has that happened? Because as the company has scaled up, it has gotten a lot of rating upgrades. There are credit rating agencies which basically assess you and your portfolio and say that, okay, this particular company may be good enough to take a higher exposure of money as loan, right? And that is basically what helps banks decide that, okay, I'm ready to lend to this guy at a lower interest rate. That is what has happened out here. And that is the reason why they have maintained a low interest rate out here as well when it comes to their cost of borrowing. And their average yield, when we talk about it, it has consistently been coming down, which is not really a positive, but has improved. But even if it has come down, that is basically in line with the global interest rate regime. So it has not really come down that much, which clearly means that company spreads would have increased, which is clearly visible out here. It has increased its spreads very well. Spread is basically the difference between the two numbers, the cost at which you are borrowing and the cost at which you are lending. The difference is spread. And the more is the spread, the more is the cushion area for you to basically, take a hit in terms of NPAs, etc., and still earn a massive profit out of it. So that is how it works. Now, this is the lending part. We can see that, okay, the company is able to borrow at very low rates and lend at high rates and basically ensure a high enough spread. Meanwhile, when we talk of the NPA numbers, its NPAs have been going up consistently. As it is growing very fast, it is giving out a lot of loans, as we have seen in the previous sliders. Its bad loans are also going up. Look at the GNPA numbers, that is gross numbers for NPA. It has gone from 0.46% of the assets under management to 1.15%. Net NPA levels have basically gone from 0.4% to 0.86%. If you look at these numbers, these have gone up very sharply. That is a matter of concern. But if you look at it overall, 1.15% or 0.86% of the assets under management is not really a big number. But a point to remember here is that, as we saw in the previous sliders, almost 35 to 40% of the assets under management is basically fresh loans, right? The company is giving out so much loans every year that its overall NPA numbers also get suppressed because of that. So probably this number, if we remove the fresh disbursements, this would probably go up by, you can say, another 0.5% or something like that. And if we kind of incorporate that, it will probably be somewhere close to 1.4%, and that will still not be that very bad. That is the key takeaway here, that you're lending so aggressively, your NPAs are going up, but as overall portfolio, if you look at the proportionality terms, it is probably not that bad right now. Alright, so we have basically seen where it is operating, how many branches are there, which territories it is going very big on, what the company's intentions are when it comes to Telugu speaking markets and Tamil speaking market, and what kind of people it is lending to, what kind of products it is basically focusing on, which is almost entirely home loans, and of course, how its core metrics when it comes to lending are. But what does it all yield into? That is basically expenses and earnings. Let us come to financials part. So when it comes to the key costs, right? First, let us talk about the OPEX, that is operational expenditure. You can see that rest of the slide is basically in a different color, and the OPEX is in a different color. That's because I wanted to highlight it very clearly. The operational expenditure as a percentage of the average assets under management has been coming down very rapidly. This clearly tells you that the company is scaling very well, which basically what I'm trying to say is that company's assets under management have gone up very sharply while its expenses have not. And as a result, your operational expenditure has basically kept on coming down, and it has grown flat out here at 2.7% or something in that range, which is very good and something laudable. Now let us talk about the key two expenses that the company basically takes on its head. One is basically interest expenses, and the other is employee expenses. So interest expenses is what basically, as I told you, the company borrows from somewhere else and then lends to other people, right? The cost of borrowing part that we just studied, it is about that. So that kind of expense is basically, it's increasing consistently, but it is because the company is also growing very heavily. So it is borrowing a lot and lending a lot. So as a percentage of overall, basically in the overall scheme of things, it is not really that big a number. So it's good. Same way when we talk about employee expenses, it has been growing consistently, but that is because the company is also growing bigger and bigger, and it is expanding at a very fast rate. It is adding new branches in all kind of basically territories in Telugu speaking areas, Tamil speaking areas, Karnataka, and now also Odisha. So that's why employee expenses ought to go high. So that is what is happening out here. Then there is provisions. Provisions is basically about what? It is about the bad loans that you have made and you want to cover for it, right? So basically, look at this one. As we saw, the overall NPA numbers have gone up, right? It displays out here. They have been making a lot of provisions for it as well. So provisions have grown to almost negligible numbers, 3 crores, 6 crores, something like that, of the overall very big assets under management number to 34 crores. This is again a very small number when we talk about the overall assets under management, but it basically kind of gives an indication that provisions have grown very sharply in absolute numbers, which basically means that it ties up with our observation about NPAs. They are growing. That is a matter of concern, and company should probably keep a check that okay, these numbers in overall scheme of things are still low, and we hope that they should not go out of hand. And if it does, then certain action must be taken up. Those are key observations out here. Then let us talk about the profits part. I think I do not have to say anything at all. The numbers are very much self-explanatory out here via these charts. The profits basically, pre-provision profits, when we talk about it, these are beautiful numbers. And look at it. One thing to take out here is, I think the only thing to basically observe out here is when we talk about PPOP, PBT or PAT numbers basically, these have grown many fold, right? From 59 crores to 688 crores of yearly profits. And consistent growth out here, right? When we talk of PBT, it has something similar to basically deliver. When we talk about PAT, that is profit after tax, it is from 37 crores, 70 crores, 112 crores, 211 crores, 267 crores, 370 crores, 503 crores. This is insanely good. I just have to admit that these are some beautiful numbers for a company with such high regional concentration. This clearly shows you that when it comes to this particular market, that is Tamil Nadu particularly, or Andhra Pradesh, this company is a heavyweight. It knows what kind of customers it is dealing with. And something similar is what we basically saw with Aavas Financiers as well in one of the earlier deep dives that we did in the previous week. Aavas Financiers, it had its core basically in Rajasthan, where it was basically centered upon. It's anyway a Jaipur based entity, and the numbers were quite similar. They were growing very rapidly, right? That is what we get to take away. So guys, that was the entire analysis. That was the entire deep dive. If you liked the analysis, if you found it insightful, do like the video, do subscribe to the channel, and do share it across. We come up with such analysis every now and then. So I'm reiterating this for you. Do subscribe to the channel. Thank you so much.